Hello everyone, welcome again. In the previous lesson, if you remember, we looked at the topic areas which we will study during the course of our lecture. I listed down all the main topic areas which are part of ACCA P6 syllabus. Now, in this lecture, we will look at income tax specifically, which is our first major area on which we will spend most of our time. The reason we spend more time on income tax is because it covers every topic, every source of income in much details, and everything we will study here, most of the stuff we will use it in corporation tax as well. That's why we spend more time in income tax. Say for example, in some colleges or some tutors pick the corporation tax first. If I would have picked the corporation tax first, then I would have spent more time on corporation tax. The reason being, again, because most of the stuff which we will study in this topic, we will use that in our corporation tax studies as well. All right. Now, as you know that this is our Finance Act 2016, I don't know, you might be appearing for exam in June 2017, or you might be appearing for exam in December 2017, or even later than that. Now, practically speaking, if you're working, say for example, if you're working for accountancy practice, you're dealing with the taxation stuff on daily basis. Now, practically speaking, if you're watching me after 1st of April 2017, you will be dealing with different tax rates and allowances because of the latest tax year, which is Finance Act 2017. Now, Finance Act 2017 is not relevant for this paper. The Finance Act which is relevant for this paper is Finance Act 2016 for exams up to March 2018. So forget about what you do at work, leave it there, because practically it is different, but for our exams perspective, it is old, it will be old eventually. It will be Finance Act 2016, which we will study during our course, during our lectures, because this is the Finance Act which will be examined in your P6 exam. All right. Now, our Finance Act is 2016, which runs from 6th of April till 5th of April. 6th of April 2016 to 5th of April 2017. That is our financial year. That is our Finance Act tax year. So we will be dealing everything, whatever we study, even in your exam as well. The questions will ask you about the taxation calculations and rules about only this specific period from 6th of April 2016 to 5th of April 2017. This is our tax year. All right. Now, you know what income tax is. We will talk about it in a minute in more details. But before we move to that, do you know that why are we paying tax? Why is government collecting the taxes? We know we have studied it at F6 as well. If you want to know the details of taxation and even more details of taxation within the UK, please go to F6 section of accountancytube.com. You will find the first lecture. Obviously, first lecture will be the introduction, but the second lecture will be about taxation in the UK. Now, if you are not comfortable with that, if you want the background of this lecture, then please go to F6 section of AccountancyTube. You'll find a lecture on taxation in the UK, and that would be useful if you want more details. However, why we need to pay the tax at all? Why is government collecting the tax? Because the government thinks that they will collect the tax, they will collect the money from rich people, and then they will divide among all the people in the country. They will make the roads, they will make the hospitals, and they will make the schools and all that. Now, these are the stuff which the government is responsible to make with our money, which we pay in taxation. Now, government is collecting the money from rich people and then spending on all of the other people, which are, the poor people. We can say the poor people with less money. Now, say for example, if I'm earning £100,000, I am a rich person, and I will have to pay tax. But what about if I'm not rich? Do I have to pay tax? Do I have to pay tax if I am a poor guy? No, if I can prove to HMRC that I am not rich enough, I'm not earning much money, then HMRC will say you do not have to pay any tax. Now, for P6 purposes and for our current Finance Act 2016, government has, HMRC has set a threshold. You know what HMRC is. HMRC is a collecting body which collects the taxes on behalf of government. So HMRC is responsible body which is collecting the taxes. Her Majesty Revenue and Custom. Now, if we can prove to HMRC that we are poor, if we are earning less money, then we will be exempt. We do not have to pay any tax. Now, government has set a threshold. Government has said that this is the amount which is necessary for an individual to survive within the UK. If they are earning more than that, then they should pay the tax. If they are earning less than that, then we should be all right. We should not charge them any tax at all. Now, what is that threshold? For our current tax year, it is £11,000. Now, that limit which we are talking about, it is personal allowance. It is called personal allowance, and for our current tax year, it is £11,000. I've just written it down as PA. You can write it down as personal allowance. Now, personal allowance is the amount up to that limit we do not have to pay any tax, and above that, if we are earning more than that, then we will have to pay some tax. We might have to pay 20% or even more than that. All right. Now, this limit, which is £11,000, and this is per year. It is not per month. It is per year. £11,000 per year. That is called personal allowance. I'll just write it down as per annum. All right. Don't look at the rest of the painting for now. We'll look at them in a minute when we move to that pro forma. And interesting thing is that all of the stuff which I have written down here on the board, it is already given to you in the lecture notes. I assume that you have already downloaded the lecture notes from our website. If you haven't done so, please make sure you have lecture notes in front of you and practice and revision kit in front of you, because sometimes I may ask you to open the practice and revision kit to do a specific question. In that case, then you will have to use the practice and revision kit. All right. Now, that is our personal allowance. If I can prove to government that I am earning £11,000 a year, then government will say you are exempt, you do not have to pay any tax. If I am earning more than that, then I might have to pay some tax. Right? So that was personal allowance. Excuse me. Now, if I am earning money, coming back to income tax, if I am earning money, I will have to pay tax on that. Now, income tax means if I am earning some income, I will have to pay tax on that, because it is income tax which I pay on my income. Now, if I am a rich person and I am clever as well, I will have many sources of income. If I work for ACCOuntancytube, I have one source of income which is called employment income, because I have a contract with my employer and they pay me salary every month. So on that salary, I will have to pay tax because it is my source of income. I am earning something from my employer. One source of income is employment income. Now, another source of income is that I do some part-time business as well. If I do some part-time business, then I am doing trading. I will have trading profits, then I will have trading income. Now, that is also a source of income, so I will have to pay tax on that as well. That is trading income. Say, for example, if I have a property and I let the property to my tenants, I am earning some rental income, and that is also a source of income. So what I mean to say is, I could have many sources of income. So the more clever I am, the more income I will be earning. It is just by using your own mind. If you're clever enough, then you will have different sources of income. Now, I have given an example here on the board. I've just made up the name Mr. Z. Mr. Z is a very, very clever guy. So he has got different sources of income. He's earning income from many different sources. All right. Now, I've just made up the name Mr. Z. The rest of the stuff which I've written here, except Mr. Z, I think, almost everything is given to you in the lecture notes. So coming back to our board now, please do not write it down yet. When I finish this, please make sure you write down everything on your notes, on your notebook, because this is the stuff. If you write now, it will be less effective than if you write at the end of the lecture. All right. So Mr. Z, income tax calculation or income tax computation for the tax year 2016-17. That's how we make the income tax pro forma. It is also called income tax pro forma. It is given to you on page number 1 of lecture notes. But please keep looking at the board for now. Now, we write sources of income from which we can earn income on the very left side. So whatever the source of income is, I will write down here. So Mr. Z came to my office. I am chartered accountant, and Mr. Z came to my office and he said that, could you please tell me how much tax will I have to pay? He told me different sources of income. So I took out the pro forma out of my desk and I start writing the source of income. Then I asked Mr. Z, what is your source of income? Now he told me that he has some trading income. So I go ahead, I have written down trading income on the board. That is my pro forma. So trading income is the income if I'm doing some business. I will have some trading income. So Mr. Z was doing a business, so he had some income. So I went ahead and put the trading income. Then he said I have some property income as well, because I have a property which I let to my tenants. So I'm earning some rent every month. So I said, all right, okay, then I written down as property income as well. Now these are all the sources of income. These are three sections by which we are chartered accountants. As a chartered accountant, we divide the tax income. Tax people divide the income into different three sections. The first section is called non-saving, then savings and dividends. Now all of these sources of income will go in each of these, one of these columns. We will see later which column, source of income will go in which column. We'll see in a minute. But for now, we are looking at the sources of income. Another source of income Mr. Z had was pension income. Now what pension is, I hope that you know what pension is. We will look at a separate chapter on pension in a couple of days. It has got a separate chapter. Even all of these sources of income has got separate chapters, so don't worry. Excuse me, we will look at each source of income in details. Excuse me. So for now, pension income is a source of income. Pension simply means that the money which we contribute towards our pension, so that when we get retired, so instead of relying on government benefits, we just rely on our own money. So that is called pension. So he had pension income as well. We will look at pension later in detail if you are not understanding it well for now. So the next source of income he had was employment income. Now he was doing some job, and so he was earning some salary as well. So that's why he has got employment income. The next source of income he had was interest income. So what happened is, Mr. Z said that I had extra money every month, so which I was keeping on one side. Then I called my wife, and she said, what is this? I said, it is my savings income. Then my wife said that, why are you keeping it here at home? Go ahead and put it into the bank account. They will pay you some interest. So then what I did, I went ahead and I took that money from home, which was my saving, and I went to bank and put that money into my bank account. So bank is paying me some interest. So that is my interest. So this interest is coming out of the savings income. All right. Then the next source of income he has got is dividends income. Now dividends, I hope you know at this level. When I buy shares in a company, they pay me share of profit. And if I have share of profit from a company on the shares, that is called dividends. So he has got some dividend income as well. Then he's got some other income. He had some other income as well. I don't know what it was, but he said, I have got some other income as well. I didn't ask him which source of income he has. So he told me that he has got some other income as well. So you might well have other income in the question. So you will have to put that in other income column. So other income, then he's got some income from discretionary trust and income from interest in possession trust. So these were two sources of income which he said he has. Now what are trusts? We will look in details again what the trusts are, and there are two types of trusts. Most of the stuff we will deal with the trust in inheritance tax, which is another section of P6, and capital gains tax. But for now, just assume that it is one source of income. So income from discretionary trust and income from interest in possession trust. After doing that, these are all sources of income. All right. Now what we have to do is we have to keep all of these income, we have to put all of these sources of income in one of these sections. Now which section will go in which area? Now let's look here. Look at the board now. Now dividends income will go into the dividend section. So dividend will go into the section of dividends. So go ahead and put the dividends here. X means the amount. So whatever the amount will be, we'll put the dividends here. Now, if you're retaking this exam and your last retake was in March 2017 or earlier than that, then you might know that the previous way to deal with the dividends was a little bit different. But new way to do with the dividends is we always receive it gross, so no grossing up needed. So whatever amount you get in the question, you will have to put the straight amount into the answer sheet. Right? So go ahead and put the dividends into the dividends. The next source of income is interest income. Now interest income came out of the savings which Mr. Z had. So savings, so it will go into the savings because he had savings at home which his wife said that go ahead and put into the bank. So interest income is coming out of the savings, so we'll put that into the savings. Now these are only two sources of income which go into the different sections. The rest of the stuff will go into the non-savings. Right? So let's go ahead and put that in here. So trading income will go into the non-savings, property into the non-savings, pension into the non-savings, employment into the non-savings, and interest into the savings, dividends into the dividends, other income into the non-savings. What about the income from discretionary trust? Now, income from discretionary trust is received after paying some tax. 45% of tax is already deducted on discretionary trusts. So what we do is, because the tax has already been deducted, what we do, we need to gross it up. How can we gross it up? 45% of tax has already been deducted, so we will multiply it by 100 and divide it by 55. And it will go into the non-savings again. That is income from discretionary trust. Why we need to gross it up? Because 45% of tax has already been deducted, so we need to gross it up. We always need to put the gross amounts into our income tax pro forma. We always need to put the gross amount, even if some tax has already been deducted. The previous treatment with dividends, I told you that we needed to gross it up because we used to get the net amount in our previous finance acts. But the new treatment is to take whatever we got in the question, we will always be given as gross, so we'll put the gross amount here. Likewise, with interest income, we used to get it as net income, and we needed to gross it up to put that into the pro forma. But the new Finance Act says that we will always get the interest income as gross, so no grossing up needed. So we'll put the same amount which I get into the question. We put the same amount into the pro forma. No need to gross it up, except for one source of income which we need to gross up and which we receive the net, and that is also interest income. Now, interest is always earned on loan. Now, if I give a loan to an unquoted company on the loan stock, so if I given a loan to unquoted company and they've given me the loan stock and they pay me interest on that, that interest will always be received net. We need to gross it up. Now, this is the only interest income which will be received net. So this is a new rule. So if you have received interest on the loan stock of an unquoted company, then we need to gross it up. We need to multiply it by 100 divided by 80. That is the only rule. Please make sure you write down on your notebook. If you have received interest on the loan stock of an unquoted company, we need to gross it up. We will do multiplied by 100 divided by 80, whatever the amount is given into the question. All other interest income will be given gross, so no need to gross it up, except for one, which is interest on the loan stock of an unquoted company. Right? So that was interest income and dividend income. Now, the next one was income from interest in possession trust. Excuse me. So the next one is income from interest in possession trust. That is paid. It could be paid out of either non-savings income, savings, or dividend income. Now, it will tell you in the question. It will tell in the question that income from interest in possession trust paid out of non-savings income or savings income or dividend income. It will tell you in the question. Now, whichever source of income it is being paid off, we will put that amount into the relevant section. If it is paid out of non-savings, we will put it under the non-savings. If it is paid out of savings, we will put under the savings. And if it is being paid out of dividend income, then we will put it under the dividends. But one thing we will always have to do is we'll multiply it by 100 divided by 80, even if it is paid out of dividend or savings or non-savings. We will always need to gross it up, multiplied by 100 divided by 80. Now, why are we grossing up? Because 20% tax has already been deducted. If 20% tax has already been deducted out of the income from interest in possession trust, then we will need to multiply it by 100 and divide it by 80. All right? So that is the way to deal with the interest in possession trust. Now, what we do is, after that, we will total all of this amount. So that is the total. I have already done it. That is the total of this amount. So that will be our total income. What we need to do is we need to deduct the qualifying interest from here. Now, what is qualifying interest, sometimes known as deductible interest? What is that? Now, interest is, as you know, is paid on the loan, right? So if I took a loan, I will have to pay interest on that. Now, if a loan is taken for a sum of the specific reasons, then if I pay interest on that loan, it will be deductible interest. Now listen to me again. If I have taken a loan, there will be purpose behind it. Why did I took the loan? If I have taken the loan for some of the specific reasons, I will tell you the reasons in next lecture. If I have taken the loan to use the loan for some of the specific reasons, and I am paying interest on them loan, then that loan will be a qualifying, the interest paid on that loan will be a qualifying interest. All right? So we will see later what the qualifying interest is in our next lecture, but for now the qualifying interest will be deducted from this amount. All right? Now, when deducting the qualifying interest, there is one specific preference. First, it will be deducted out of the non-savings income, then from savings income, and finally from dividends income. This is the order. This is the order by which we deduct the qualifying interest. And after that, it will be net income before personal allowance, and after that we will deduct the personal allowance out of it. Now, what the personal allowance is, I already told you. For our current tax year, it is £11,000 per annum. The personal allowance is the amount by which up to that amount we do not have to pay any tax. So that's why I deduct the £11,000 out of this amount. Now, say for example, if I had 15,000 there, I will deduct 11,000 out of that. Only 4,000 is subject to tax, on which we have to pay tax. So that will be my taxable income. All right? So that is my taxable income on which I have to pay tax. I will just wind up this video here, and I will resume my lecture in the next lecture, in the next video. In the next video, we will see how to calculate the tax and what we need to do after calculating the tax. All right? So till here, taxable income, that is our taxable income on which we have to pay tax. Now, how can we pay tax? There is a specific table given to you on page 1 of your notes. Please look at your notes, page 1. Just beneath the taxable income, there is a table given to you. According to them rates, we will calculate the taxable income. All right? So I will see you in the next video, and we will resume the lecture from here. If you haven't written down anything from that yet, do not worry. In the next lecture, you will have the next video. You will be given this data again. All right? So that's it for now, and I will see you in the next video. Thank you.